Welcome to the Explainer. Today, we're gonna put on our detective hats and investigate the clues hidden deep inside a stock's technical analysis. We're not just looking at numbers here, we are looking for a story. All right, so our case today is stock SOPA, and as of October 5th, this is its price, $1.41. Now, this single number, it's our starting point. You could even call it our crime scene. From just this one data point, we're going to try and unravel the entire story. So, you might look at this and see that a lot of automated trading signals are just screaming buy. But, any good detective knows the first piece of evidence isn't always the whole story. So, is this a green light to go, or is it a warning in disguise?
To really crack this case, we can't just take one signal at face value. Nope. We've got to dig in, examine all the evidence, piece by piece, and figure out what narrative the data is actually trying to tell us.
Every good mystery has that one key event, right? The one that changes everything. And for us, it's right here. Back on August 14th, the price made this really dramatic jump. Now, that wasn't just some random move. It was a huge event that really sets the stage for everything that follows. Okay, so where do we start? Well, the first rule of any investigation, as they say, is to follow the money. So our first lead is going to be the trading volume. These are the footprints of the buyers and the sellers. Whoa, now just look at this chart. See that massive spike on October 3rd? We're talking over 4.7 million shares traded. That's not just a little blip on the radar, that's a huge clue that some big players are making their move. And this gets backed up by a cool little tool called on-balance volume, or OBV. Think of it like this. It's basically a running tally of the money flowing in versus the money flowing out. And for SOPA, that number is over 208 million. That's a strong sign that on the whole, the buyers are being way more aggressive than the sellers. So what's the big takeaway here? This specific price range, it's acted like a major hub of activity in the past. It's like a price memory zone, a place where a ton of shares changed hands. And that means it could act as a future floor of support. All right, let's move on to our next set of clues, the momentum indicators. And this, my friends, is where the case gets really interesting, because our witnesses are starting to disagree with each other.
It is literally like we have witnesses giving conflicting testimony. On one side, you've got these bullish signals basically yelling, go, go, go. But then, on the other side, you have a whole crew of cautionary signals flashing these bright red warning lights, suggesting the stock might be getting a little ahead of itself. Let's look at one from each side. So let's call our first witness to the stand, the bullish side. We've got the stochastic oscillator. Think of this thing like a speedometer for the stock's momentum. It tells us how strongly the price is closing near its recent highs. And right now, it's pointing straight up, which suggests some really strong buying pressure. But then, we have this. Bollinger Bands. They create this kind of river or channel that the price usually stays within. But look what's happening now. The price is pushing above the upper band. That's a classic sign that things might be getting a little too hot, a little too fast. It's like stretching a rubber band. The farther you pull it away from the middle, the more likely it is to snap right back. This is basically a hint that the stock might be overextended and could be due for a breather. Okay, so with all these conflicting clues, what's a detective to do? You zoom out. You've got to look at the big picture. So let's investigate the long-term trend and get some context here. So when we crunch the numbers and draw a straight line through the historical data, what do we see? Well, it actually shows a very, very slight downward drift. So even with all this recent excitement, these big price spikes we've seen, the bigger underlying trend has been kind of pointing down. And this number here, the R-squared value, basically tells us how reliable that trend is. And at almost zero, it's telling us that trend is, well, it's incredibly weak. It has almost no power to predict what's coming next. So in this case, looking at the past isn't really going to help us solve the future. So, if the long-term past isn't a good guide, what is? Well, it's what's happening right now. And look at this. The current price of $1.41 is trading above all the key moving averages, both the 50-day and the 200-day. That is a huge, undeniable sign of recent bullish strength, and it's totally overpowering that weak long-term drift we just saw. All right, detectives, it's time. Let's assemble all our evidence on the board. We need to identify the critical price levels, the lines in the sand that are going to tell us where the story goes next. This is where the battle's going to be won or lost.
Okay, so these are the battlegrounds. For the bulls to really take charge, they've got to break above that resistance at the current high of $1.41 and this other key level at $1.43. Now, that's a Fibonacci level, which is just a fancy way of saying it's a price zone traders watch really closely. They often act like these invisible walls. On the flip side, for the bears to grab control, they need to shove the price down below support at $1.35, another one of those key zones, and the recent low of $1.17. And we've got one last piece of evidence: volatility. The average true range, or ATR, tells us how much the stock typically swings in a day. Right now, that's just over 8 cents. So what does that mean? It means we should probably expect some quiet, tactical moves for now, not some wild, all-out price war. So after looking at all of the clues, the volume, the conflicting indicators, the key levels, our investigation doesn't lead to one simple open and shut conclusion. Nope, it actually leads us to 3 distinct, totally plausible scenarios. So what could happen next? 1, we could see a bullish breakout if the buyers can punch through that resistance. 2, we might get a bearish pullback if traders start taking profits off the table. Or 3, we could just see a neutral holding pattern where the stock moves sideways as the market tries to figure out all these conflicting clues. So, what's our final verdict? Well, the evidence is definitely mixed, but that strong, recent buying pressure, it gives a slight edge to the bulls. I'd say the most likely scenario here is that the stock trades sideways for a bit, kind of consolidates, before maybe trying to push higher. The buyers seem to have the upper hand, but this case is definitely not closed yet. And, this whole case really gets to the heart of what analysis is all about. It's almost never about finding one single, simple answer. It's about weighing all this conflicting evidence, understanding the probabilities, and then making the smartest decision you can when you don't have all the answers. And that right there is the real mystery that every single one of us is trying to solve.